This is the Norris Group's Real Estate Investor Radio Show, the award-winning show dedicated to thought leaders shaping the real estate industry and local experts revealing their insider tips to succeed in an ever-changing real estate market. Hosted by author, investor, and hard money lender, Bruce Norris.
Welcome back to the Norris Group Real Estate Radio Show. This week, we continue with Marck Lautour, CEO and founder of SBD Housing Solutions.
So here's a good question. In 2000, you had Trustee Sales decline from 2001 to 2007, but then they exploded in 2009 to say 2012.
Yes.
That doesn't mean they were worth going to. You might have had REOs way cheaper than your opening bid. So I'm just curious, during that cycle, did you end up finding more deals as REOs and short sales as you did at the courthouse steps?
No, it comes back to my mile deep. That was a massive opportunity for me at that time. So the answer is a small fraction we got as REOs and MLS. They were still getting multiple bids, but we would show up at the courthouse steps and just have one or two people. So, that was where we were getting home run deals. Quite frankly, could have just taken them from there, put them on the MLS and made money. But, we pivoted, and that's kind of where the turnkey provider mentality came from, because at the time, as you know, when the market tanks, one of the first things to dry up is financing to flippers and the banks were no longer lending to us in the same capacity and really shriveled up pretty quickly. Real estate, single family was kind of a four-letter word inside the banking community. So we needed capital. And so one of the ways I did that was went back to, people that had seen me do what I was doing, had heard the stories about the home runs I was getting on the courthouse steps, and said, hey, if ever you can find me a deal, let me know. Mm-hmm. And so I started saying, hey, banks aren't lending to me, but there's still deals and I know how to buy and rehab and manage. How about we build you a portfolio? And so I just got a few really good buyers and expanded that base. And so now, to this day, we've been kind of steady to that task of buying a house, rehabbing it, get it rented out, and then selling it to our investor, as a turnkey, done for you portfolio. And some of our investors are up where they have, 40, 50, 60 homes that in their portfolio that they've been buying since 2010 until today, and just continue to change their family tree by investing in single family.
That's a pretty amazing thing, and especially since they didn't have to locate the property, they didn't have to have the experience to fix it, and it probably changes the amount of homes you can buy. You're not necessarily having to resell everything or have a margin, let's say, if you were buying it to fix it to sell it in the marketplace, you have a ready, willing buyer. I just think it's one of those business models that is very sustainable, because you've got a clientele that's not trying to chase deals. They're trying to chase inventory. They have no access to getting it there themselves. And
You're
they want
exactly right. No, that's one of the
long term.
Yep. No, that you're exactly right. That's one of the things that I think gives me comfort in any of these, times where we don't quite know what's coming down the pipeline, is that if we stick to our model of buying homes, $240,000 and, between 100 and 240,000 in the Midwest, there'll always be, quality rental homes that we can sell to an investor base. So we're kind of cheating. We kind of already sold the asset as soon as we buy it, Bruce.
No, it's great. It's a very smart business model, and it's nice that it's a smart decision on the part of the buyer that buys it from you. When 2009 happened, I recall having lunch with a gentleman named Mike Cantu, a very successful real estate investor. And since I had seen it coming, I had gotten out of harm's way. And the first 10 minutes of lunch was talking about all of the people in our lives that were caught off guard and that were devastated and all that. And then the next 50 minutes were just about, hey, how are you doing? Because our world was different, because we had sustainable rents. We had our monthly nut covered. And that's a big deal, to be able to provide that for people in a system where they can do that on their own. A lot of them, see, what's interesting about your client is most of them are not really into real estate. They're into real estate.
Yep.
Yeah.
Yep.
That's
Yeah.
an interesting thing.
Yeah, no, our ideal client is, dentist, doctor, lawyer, accountant, someone that's, making good money and thinking, man, is the stock market really worth the gamble? Why am I putting all my faith in this roller coaster ride and living and dying by having to watch CNBC all the time to see if we're going up and down? Look, there's a time and a place for the stock market, but I believe that the benefits of cash flow, depreciation, and appreciation that you can get from real estate, and of course leverage, being the fourth wonderful component of real estate, is why I'm encouraging a lot of investing activity, in through our office, and trying to get people to deleverage from the vagaries and the risk of the stock market, understanding that real estate can be done. The reason it hasn't been done, I think, quite frankly, our real estate industry that you and I operate in, Bruce, has done a poor job of catering to high income, high net worth individuals that want to get into real estate. It's always been you've got to hassle with go and find the deal, or go find a realtor that, and everyone's a realtor, right? So, get a realtor that may find you a deal, may not. And then as soon as the transaction closes, then they leave you at the altar. And then you've got to go find construction people to rehab the house. Then you got to find a property management company. And they do one or two of these and they think, oh my gosh, real estate's not for me. This is a nightmare. And so, yeah, there's been a revolution, turnkey revolution of people that are providing this done for you product that, when properly managed, again, it's one thing to just sell someone a house. It all comes down to property management. You've got to have in-house property management that offsets the two big killers of cash flow, which of course, kill any real estate transaction, which are vacancy and maintenance. But if you can control vacancy and maintenance, real estate is a pretty profitable venture.
A lot of that too has to do with what you've chosen to buy, right? Where you've chosen to buy it. So location has a lot to do with the hassle you're about to experience.
No doubt. No doubt.
And Mark, where are you guys buying everything right now?
So we're in Kansas and Missouri. We're also in Alabama, and looking at opening up markets in Tennessee and Northwest Arkansas, around where the Walmart and Tyson plants are. So yeah, just in the Midwest, we tried and failed. We've kind of scraped our knees and elbows in a few areas. We're up in the Quad Cities market, up in Iowa and Illinois. Anytime we go into a new market, we always do it ourselves first before we sell inventory to an investor. We want to make all the mistakes so that our investors don't have to. And so we went up there, and boy, the bureaucratic red tape in that little town up there was too much to overcome, unfortunately. And when you have to wait a month for an inspector to come inspect the electrical, it just, to your point, I think we were talking earlier, Bruce, it's just sometimes, the supply chain and the labor constraints are such that getting very difficult for the actual construction work to get done. And we ended up having to pull out. So we did 10 properties up there, barely broke even, and said that's enough for us. And we're going to move on to other areas where we're having great success in those markets I mentioned. Yeah,
but how great that you're willing to stub your toe and not other people's toe.
Well, I think that's the whole benefit of investing through someone else is, we are the experts in the market, and that's why we like working with people that have no knowledge of real estate, is because, hey, who better to, we don't want to say, hey, what color paint do you want, or what street you want to buy on? We're the experts. We've done the due diligence to know that what we're proposing to our clients are just quality rental properties in good markets that will stand the test of time. And then it just comes down to executing on the property management.
Yeah. So hence the title of your book, Mistake-Free Real Estate.
Mistake-free real estate. Yeah, we've made all the mistakes so that others don't have to. Yeah, it's very much tongue in cheek, right? I mean, clearly there's a million mistakes to make in real estate. I've pretty much made most of them over the 20 years that I've been investing in real estate. But I think we're at an age now where collaboration over competition is kind of our mantra, understanding that real estate is a crockpot business, not a microwave business. We're not telling people they're going to get rich overnight, but they can certainly get wealthy over time.
What's interesting, that real estate is a fit for my personality too, because I don't like to watch. I've invested in stocks on occasion. And even though if I don't have enough money to worry about, I pay attention to the price like 6 times a day. And when I own a house, or a trust deed, I don't look at it at all. I don't, that's not why I own it. It's just a different mentality for me. So it is a good fit.
Yeah. And once you get to scale, we teach our investors to scale with leverage and then start powering down debt. And I think once you get to over 10 houses certainly over 20, you don't even notice. Vacancy and maintenance are just two little line items in a monthly P&L, and you get extremely steady cash flow. So those of our investors that have got over 20 homes, they're just like, gosh, sign me up. Just, anytime you send them a new deal, they'll, oh, great. Thanks so much. Sign me up for another one, because they understand the benefits of that long-term appreciation. And my goodness, I mean, I know that, we've had 12 years of a bull market, but still real estate has just outperformed. It's been crazy.
Yeah, it's been a great run. Do you have a favorite real estate trainer?
Favorite real estate trainer? I would go with probably Steve Trang. Certainly helps out a lot of our local acquisitions agents here at SBD Housing. John Martinez is another guy out of Springfield, Missouri, that is really good in the real estate space. I've recently expanded my operation into buying apartment complexes, and I do that through a partnership with one of my mentors, Corey Peterson, with Kahuna Investments. And Corey and I are buying apartment complexes, and so in the multifamily space, he's certainly been someone that I look to for guidance and wisdom for sure.
Okay. What about outside of the real estate world? Any influential mentor outside of the real estate world?
So I'm a guy that reads a lot, and sometimes I have mentors and they don't even know it. So I think my most recent one in that regard would be Keith Cunningham.
Okay.
The Road Less Stupid is a phenomenal book. I'm always read my books, but occasionally I'll download the audio if I've got a long car ride. And my goodness, just at the end of every chapter, have you read the book, Bruce?
No, but I'm about to.
Oh yeah, it's phenomenal. So he just talks in general about business ownership. He does technically have a little bit of a real estate background. He dabbled in real estate, I think, in the Phoenix area. I say dabbled, he had a big real estate company, but I think he owns multiple companies. But Keith's actually claimed to fame. I think he was the rich dad that inspired Kiyosaki's Rich Dad, Poor Dad book, or at least had some collaboration along those lines. But Keith ends every chapter by saying, "Now go think. You'll thank me later," meaning it's easier to do than to think. Sometimes slowing down to think about something, and I think you could appreciate this because you're a guy that likes data and charts. Sometimes if you slow down and think before you act, good things happen. And he's a guy that has written, I think it's a 57 chapter book called The Road Less Stupid. And kind of similar to Mistake-Free Real Estate, where I've made all the mistakes. I think he's made a lot of mistakes and is just telling people how to avoid them, but very influential book that I constantly go back to. And then I would be remiss also if I didn't mention, I do have a CEO coach and mentor, Daniel Marcos. He is the CEO of Growth Institute. And Daniel and I have, a call just every other week. He keeps me on point. I bounce any ideas off him. He's been instrumental in my growth as a leader now that I've kind of elevated to a CEO position. He certainly helped and has been a blessing for me over the last 12 months.
How have you avoided the hard money loan business?
You mean as a lender?
Yeah.
I think it's probably something I should have got into. I certainly understand that, selling, I guess it's because as a turnkey provider, we don't really have those relationships with, other fix and flippers. We were the guys that were doing it ourselves. I've got deep banking relationships that we use on our own. And so I've always had the sale on the back end secured by my turnkey provider. Right. If I was selling to investors, I certainly would have seen the light. I know have a lot of friends that are in hard money, with guys that are lining up to not only buy the inventory from them, but also the hard money. So yeah, because we don't wholesale, that's probably one of the reasons that we've avoided it. But I love the business model. Clearly the money's in the money, and I guess I would say I'm still a young guy. There's still time, Bruce.
Some of the stuff you get involved in it seems quite accidental, honestly. That's the journey for me. It seemed like that. I never intended to teach. That was accidental. And I never intended to be in the hard money loan business. And that sort of, it's kind of dominoed. It's been a great journey though. I think
real estate offers you a great variety. It's just, it's pivotal to so many different industries between mortgage and title and lending and appraisals and inspections. I mean, there's just so many variables, property management. Yeah, I think it's a wonderful segue for people to expand and grow their options.
Collective Genius, we'll kind of wrap up with this. Was after your trustee sale business sort of got depleted by the course of things, auction.com and so forth. So what did Collective Genius have to offer you that really has made an impact?
Yeah, so I'll back up and say it was actually before that, thankfully. So I joined in 2016, business going well, buying north of 100 houses a year on the courthouse steps. And again, people are put in your life at a time. I think when the pupil is ready, the master appears. And Jason Medley, the founder of Collective Genius, called me up one day from a referral, and he was just speaking my language. He understood that I was just a lonely entrepreneur on an island. I don't know if you've ever felt this way, Bruce, but I was weighted down with the burden of having to be a funnel of top-down decision-making because I did not have any process or systems or procedures. I'm 100% visionary. I struggle with implementation of accountability and systems and procedures. Obviously, I did it, but the more you scale and grow, doing it with 2 or 3 people that report to you is different than doing it with a organization of 35 employees. And so Jason spoke to me in a language that I was just relieved that someone could relate to what I was going through. And so I went and investigated and suddenly found a group of peers. And now Collective Genius it's an insurance policy. It's my lifeline. It's who I turn to when COVID hit, because you have the best real estate minds, guys that are flipping, all of them are flipping over 100, some of them 500 homes a year. I think there's a guy that's wholesaling, 10,000 homes a year in this community. And so you have the biggest minds of self-storage, of fix and flip, wholesalers, turnkey providers, property managers, all in the same community from different marketplaces that all come in with the idea that you drop your ego at the door and you're there to help each other survive and thrive and protect yourself from what's coming. Hey, what are your wins? What are your losses? How can you learn and grow together? So I was in there in the room and I was seeing, obviously, what I kind of do is pay attention to the people that are operating on the coasts. I think we have a mutual friend in Phil Green, who's a part of the group. And he operates down in San Diego. And, Phil was kind of, feeling a little bit of a shudder in the market. I would pay attention because I knew that shudder would come, start heading east and would hit Kansas City soon enough. And so those are the relationships that I now value. We spend 1 week every quarter together. We come into a room and have keynote speakers such as yourself, but more importantly, we present on something that's going really well in the business and we ask for help with something that we're struggling with. And that allows the veil of pride and ego to be dropped so that you can actually say, hey, with humility, here's what I need help with. Who's an expert in this field? And, without any doubt, there's always someone that either is doing well or knows someone that's doing well that can help you stumble from stumbling and get back onto the road of prosperity. Daniel Marcos, my coach, talks about the valleys of death, meaning every time you're growing and scaling, it's not linear, but you have these valleys of death that you have to get through. And I always find that when you're going through one of those valleys of death, whether it be with an acquisition strategy or sales or HR or property management or, rehab, there's always someone in the community that has been there, done that. And surrounding yourself with like-minded, smart individuals is a way to kind of fast track yourself to get through those valleys of death.
Do most of the members sign up year after year?
Oh, the longevity of the group is something that you don't see in typical masterminds. Yes, is the answer to that question. So I've been in there 6 years now, going on 7, and have now been elevated onto a leadership position on that in that group. But I am not even one of the most veteran. There's probably at least 20 people that have been in there longer than 6 years. And I think the average life cycle of a mastermind group is typically around 2 years. You get in, you learn, you get out.
Right.
But no, it's massive lift. There's a lot because there's community there and there's value that's coming every single time. So yes, there is strong longevity in the mastermind group itself.
That's fantastic.
Mark, you talked about the places that you guys are in, and they weren't exactly migration hubs in the country. Is it the price point, or what is it that keeps you in those markets and not, going Florida or Texas or Idaho, places like that?
Texas is taxes. Idaho's price. What you'll find is that they do have positive migration. They're the sleepy ones under the radar, Joe. It's a great question. But what we're looking for is not your top 20 metropolitan areas. We're looking for obviously cheap land, but with inflated rents. The old 1% rule has kind of flown out the window. It's very rare now that you can actually buy a house of quality, that you can get $1,000 a month of rent for a $100,000 house. But we're probably somewhere hovering around the 0.87 to 0.9, where you would get for a $100,000 house, you might get $870 or $900 a month. So we're still pretty close, and they cash flow significantly better than in those other markets. We did operate down in Florida. We had a division down there, and we still have a few rentals, but we're not actively buying in Florida. Just because it's extremely challenging on the buy side to make something cash flow as a $500,000 rental home. We look to deliver cap rates in the sevens to our investors, between 6 and 7% cap rate, oftentimes up to 7.3, 7.4. So really strong returns, and we just can't replicate that in the bigger markets that you're talking about, like Idaho, Salt Lake City, Phoenix, Florida.
Well, the other thing I wanted to say is thank you. You guys were one of the first to commit to our I Survive Real Estate sponsorship. So I wanted to thank you personally for that also.
You bet. Well, that's actually on behalf of the Collective Genius Mastermind Group. We're proud to be hosting Bruce as our keynote speaker coming up. And it's the least we could do. We're excited not only to be financially supporting the event, but come along and gain from the wisdom that's going to be shared at that event. We're really excited, and thank you again.
Our pleasure. Well, Mark, I have enjoyed talking with you today. Really
Thank
have.
you, Bruce.
I think you got a brilliant business model, and you're doing a lot of good for a lot of people. So that's really great.
Elevating communities and simplifying real estate. That's our two things. So we're trying to do both at scale.
All right, Mark, have a great day.
Thank you, Bruce. Appreciate your time.
Okay.
Thanks, Mark.
For more information on hard money loans and upcoming events with the Norris Group, check out thenorrisgroup.com. For information on passive investing with trust deeds, visit tngtrustdeeds.com.
The Norris Group originates and services loans in California and Florida under California DRE License 012-19911, Florida Mortgage Lender License 1577, and NMLS License 1623669. For more information on hard money lending, go to thenorrisgroup.com and click the Hard Money tab.